All right, January 8th, 2026. This is a review for the Nasdaq Index Stock Futures. Today is Thursday. On review, Thursday produced this daily candle. This is a daily chart. Bias is bullish, aiming for 26,123.75 as a drawn liquidity. Buy side was stacked, but we rejected. We have been bullish on Monday, Tuesday, Wednesday. Wednesday hit this pool of buy side liquidity pool and rejected. We closed below the buy side liquidity pool, and that's with an indecision candle. So it's showing weakness coming to the marketplace. Thursday, based on how yesterday closed, is permitted to trade lower. There's a little imbalance here. It's a buy side imbalance, sell side inefficiency that's occurring at the upper quadrant of the grading between this high and this low of the premium week, which is now in the discount section of our price action. I'm permitting price to trade lower right up to the old new week opening gap, but I do not want to see this level breached in terms of candles closing below it. That would invalidate longs. Final invalidation for the bullish bias will be seen if price disrespects premium week lower quadrant. I'm permitting this trade lower for price to reprice down here because this is the discount portion between this low and this high. Equilibrium falls here and a retracement to equilibrium is permissible. Moving to Friday, you will see that Thursday's candle closed within this buy side imbalances and efficiency. That gives hope for a possibility of a return of bullishness this Friday and going into next week. Now remember the 4-hour bullish order block from the 4-hour chart. I'm drawing your attention now to the mean threshold of that bullish order block. The mean threshold finds itself here, and the way mean thresholds work on other blocks, if we see price trade to the mean threshold, we want to see an immediate rejection. We want to see price move away from it with speed. We see on the hourly chart, price reject, hit it, reject, hit, reject. This is not exactly what we want to see. We wanted to see a V-shaped reversal away from a mean threshold. Price is not delivering that. It's being sluggish to move to the buy side. Compounding to that fact, we had an initial order flow entry drill here. Price has traded below this new week opening gap and is finding resistance on it here. Price has inverted the mean threshold. It has inverted the bullish order block on the 1-hour chart, which is this order block, and now it is rejecting mean threshold lower. Moving to Friday, I want to see price stay above it. Price should eat up this level, trade back to the high, and find support at this 1-hour mean threshold for the bullish order block. Those are my situation moving to Friday. But for Thursday's review, focusing on this candle is 6 a.m. to 7 to 8 to 9 on the 4-hour chart. But on the 1-hour chart here, where we're on the 1-hour time frame. This is the opening bell, essentially 9 a.m. running down. 9 a.m. hour runs down to mean threshold, and we see a rejection from it. However, moving to the lower time frame, you find out that there was no confirmation. For a mean threshold of a 4-hour order block, I expect an M15 change instead of delivery, or an M15, that is a 15-minute market structure shift higher. Clearly, we do not see that. On the 15-minute time frame, you can look at Asian highs. They are formed relatively equal highs with this 3, 1, 2, 3. So there's buy side relatively equal. That could be attractive as a draw. And this move downwards was not in the cards, with the exception of regular trading hour sell side liquidity pools. When I drop down, I'll show you the regular trading hour chart, and you see that there's a lot of sell side liquidity pools being tagged right here as it trades lower. However, I saw electronic trading hours, they'll say an old low here on the M15 time frame. Since liquidity was taken here, I expect price to rally and displace higher for this old high and draw liquidity which was above. However, it seems buy side expansions are done because price shifted its attention to the sell side liquidity pools, taking London's low, trading lower even below the Tuesday midnight opening price. The significance of Tuesday midnight open is showing the discount and premium levels as well on the weekly range. Wanted to see price remain above this Tuesday's midnight open. Would like to be bullish below it, but when we are up, we do not want to see price rejecting lower and closing below Tuesday's midnight open. Midnight open on Tuesday just shows you the discount and premium on the weekly ranges inside. Looking at today's midnight opening price, it finds itself here and the 8:30 open. So price was trading at a premium relative to the midnight opening prices for discount and premium, and we see price displaced lower, attacking the sell side liquidity pools on regular trading hours, which I'll show you in a second, and attacking the London lows. I was not interested in anything here because when price got to this level, there was no confirmation higher on the 15-minute time frame. We saw a market structure shift on 15 minutes, but this was only after the New York PM session had concluded. So the New York AM session was done, New York PM session was done, and this is 4:30 p.m. where we're seeing a market structure shift on the 15-minute time frame. There was no opportunity for longs, and I'll show you that on a lower time frame. Moving to the 1-minute time frame, you can see on the left hand panel, to the right this is the 1-minute time frame, but to the left this is a 15-minute regular trading hour chart. You can see the regular trading hours pools of liquidity, New York PM lows from yesterday, technically traded through as a gap lower, New York PM lows, New York PM lows. This is what we spoke about in the previous video when we're reviewing Wednesday's price action. Price filled in this void and moved lower. This reversal happened at lunch on Wednesday. Thursday opened here, hitting hard on sell side liquidity pools, and finally found support at consequent encroachment of old opening range gaps. So this is a consequent encroachment of an old opening range gap. This is a consequent encroachment of another old opening range gap. Below you can find another old void. A void here is simply a portion of an opening range gap that was not closed. The open portion of it that is remaining is here. There's still sell side here, but market took 1, 2, 3, 4 pulls of sell side here and rejected higher, finding support at the constant encroachment of these old opening range gaps. Looking to the right of the screen, you can see New York AM session. 8 o'clock, 8:30 trigger time here, 9:30, 10 o'clock AM silver bullet hour right up to 11:30. The Nasdaq opened and traded lower aggressively, taking London lows and these sell side liquidity pools we mentioned here. However, the market was decoupled. There was no long opportunity because there was no market structure shift or clear change instead of delivery on a 15-minute time frame of this mean threshold of a 4-hour order block mean threshold. However, we saw price respecting the old new week opening gaps, but that's not enough. That's the only bullish signature here. There was no confirmation for longs. Everything was on the short side. I do not really see an ideal setup for shorts. So sitting on the hands, no trade on Thursday. To show you this same setup, this same New York AM session on the S&P 500 and on the Dow Jones futures, you'll see that the markets are decoupled. Moving to the S&P 500 chart, you can see it was nasty, just massive consolidation back and forth consistently. It rallied. There was no rally on the Nasdaq, but there was a rally here, and this was just nastiness. Look at the Dow. The Dow rallied aggressively as if he had nothing to do with the Nasdaq or the ES. But all of these three are totally correlated markets. They move in tandem with each other usually, and we are seeing a decoupling on this session. The Dow moving higher, the S&P 500 stuck in a range, and the Nasdaq delivering lower for sell side. What are my thoughts? This run lower on New York PM lows, regular trading hour lows, launch lows, old lows, and finding support at this high, at this mean threshold, could be a liquidity rate, an SMT type liquidity rate, while the other two indices, being the S&P 500 and the Dow Jones, were not willing to go lower. That's possible, and it could be the market tipping its hand for higher prices. However, this rally was unprecedented. It's too much. Drawn liquidities here have already been met on the Dow Jones, so I look at it as a decoupling, and I'm waiting for more info on the higher time frame. That being, I want to see price moving into Friday's trading. I want to see price eat through this 1 hour min order block. I want to see price eat through this order block and find support. That will be indicative of higher prices. But staying below the mean threshold of this 1 hour order block signifies bearishness, and previous week low could be in play today or could be in play going to next week. That's it for this week's review. So that is it for Thursday's review. Best of luck trading Friday. I'll see you in the next video. If you found value from this one, subscribe and let's get it. Stay strong.